ZIM Integrated Shipping Services has declined more than 40% from its peak. There is also a major decline in the stock market because of many reasons, like interest rates, war, and overvalued assets. But these events give you the opportunity to find great businesses at a cheap price. And this company has 3.9 billion in cash. Their net income for the first 2 quarters of this year was of around 3 billion. And if you look at their market cap, you can see that they have of around 5.8 billion. Plus, they paid $24.60 in dividends for this year 2022. And the big question is, how much will they pay out in dividends and if the stock price remains around this level? And in this stock analysis, I'll help you to see their business model, their fundamentals, what opportunities they have, and the risk for this company. So stay with me to the end of this video and you'll find this stock analysis, the outlook for this business, and if ZIM is a good investment. And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed. Let's begin. ZIM is a container shipping company from Israel, and their business model is like this. They provide shipping services in over around 100 countries around the world. They are available in more than 350 ports worldwide, and they have over around 30,000 customers. And they currently operate 149 vessels, and their main advantage is that they can expand their fleet or reduce it based on the demand. They simply rent those vessels and provide shipping services to different customers. They have more contracts, agreements, and also alliances with other shipping companies in order to be more efficient with their fleet and the routes where they operate. As you can see in this image, they have more routes and the most important lines are between Asia and the USA, the Pacific area. And their contracts and agreements depend on the freight rates. When they are high, they are able to charge more money for the shipping services. And when the rates are low, they will charge less. And of course, they will make less money. And as you can see in this chart, a big part of the revenue of around 50% came from Pacific area, the routes between Asia and the USA. And the second part is more diversified in different regions. Just keep in mind that they have more routes around the world, where they can provide their services. Now, let's see their fundamentals. ZIM has a market cap of around 5.8 billion and pays a dividend between 20% and 50% of their earnings. They don't have a stable dividend because their earnings depends on the freight rates. So I can tell you that they pay 50% in dividends because next quarter they might make less money and the dividend will be lower or higher if they make more money. It depends on those rates. And as you can see in this image, the revenue has started to grow in 2021 because the rates went up a lot. The demand was higher and also because of port congestion. And even though the rates have started to decline, the revenue for 2022 is expected to be of around 13 billion and their earnings to be of around 5 billion. This happened because they've increased their fleet, they rented more vessels, and also because they signed contracts when the rates were at the highest peak. But don't expect this to continue because as you can see, in 2023, it is expected a decline in the revenue and also in their earnings. And you might see lower numbers or higher. Keep in mind that everything depends on those freight rates. And the total assets are around 11.4 billion, of which the cash is 3.9 billion. And the total liabilities are around 6.2 billion, of which the debt is around 4.5 billion. So with the money they have and the earnings that are expected, the debt shouldn't be a problem for them. Now let's see what opportunities they have and the risk for this company. As I said, the revenue depends on those rates. And in this image you see the global container freight index. And also keep in mind that every route where they operate, region, has their own rates. As you can see in the left side, there are more rates for different regions, from Pacific and others. And ZIM is trying to operate on the routes where they have the highest return. They have more experience in this industry, also because the company was founded in 1945, and they also have good management. From what I've seen, they invest back into the business, they've made more investments in companies which innovate in this industry. And they also take care of the shareholders. As you saw, they paid a lot of money in dividends. And for the second quarter, 2022, they will pay a dividend of $4.75 per share. This means a yield of around 9.75% at the current price of $48.67. And this is just for the second quarter. In the next 2 quarters, they will pay other dividends, which will depend on the income they make. As I said, it is expected 5 billion in earnings for 2022, and for the first half, they've already made 3 billion in earnings. So you can assume that they will make another 2 billion by the end of 2022. And as they said that they will pay between 20 and 50% of their earnings in dividends, then you can assume that they will pay 20% in dividends of that 2 billion from earnings. Maybe they will pay 30%, this depends on the management, but let's be conservative and assume just 20%. And this means 400 million in dividends for the second half of this year. To be more precise, 6.8% in dividends. And don't forget, if you invest by August 29, you'll also get that dividend of around 9.75% from the second quarter. So in total, you can get a dividend yield of around 16.5%. Just be aware that some brokers might require some time, so it's better if you invest until August 26. And for the next year, if you assume again that they will pay 20% of their earnings in dividends, then the yield will be of around 5.4% for the entire year, because it is expected of around 1.5 billion in earnings. So this is what you can get from this business. 16.5% in dividends for this year if you invest by August 26 and 5.4% for the next year. But also keep in mind that everything depends on those rates. If they go higher, you might expect higher dividends, but if they go lower than expected, then you'll get less money in dividends or nothing. And this is their main risk, those rates. Their business depends on those numbers. And if there is a recession, be sure that the rates will go down even more. People will spend less and the demand for shipping services will decline. It also started to decline because of inflation. People now pay more attention to their purchases, and it's likely to see other declines in those rates. As you can see, the rates have declined from 11,000 to 5,000 for the global index, and is likely to go down even more. And you have to be aware of this risk because your dividend will depend on those rates. If they make less money, you'll get less in dividends. And about the dilution, I don't see big problems. They issue some shares, but not so much, and they have around 120 million shares. And as they have more money in cash and they also have earnings, it's unlikely to see a big dilution. Maybe after 2023, if the rates go down too much, they'll need some money for their operations. Now let's discuss about investing in this company. As you can see, the stock price has declined more than 40%. And in order to avoid something like this, when you invest, you also have to see the risk and the reward, what can happen. Because if you invest at the wrong time, you can lose a big part of your money. So the risk of investing in ZIM is that the market cap can go to 1.5 billion. As it is expected 1.5 billion in earnings by 2023, and the PE ratio might be around 1. And keep in mind that everything depends on those freight rates. If they make less money, then the market cap can be lower. And the reward, besides that decline in the market cap of around 74%, you can get a dividend of around 21.9% if you invest by August 26, 16.5% for this year and 5.4% for the next year. And also be aware that you will pay a tax rate of around 30% on that dividend. It depends on your country. So you see the risk and you know what to do. Now, if you believe that the rates will go higher, then the reward will be much higher. Everything depends on those rates. You might invest now in order to take advantage of that dividend of around 9.75% and then to sell it. But keep in mind that also other people will do the same thing, and then the decline in the stock price might be higher than that dividend, and you won't make any profits. Just keep in mind the risk, and tell me in the comments, where do you see this business in the next 10 years? And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed.